Hey, what's up, guys? Sam here, and I'll be doing the video for Friday, October 27th, 2023. So the market's about to close here in about 10 minutes, and I think it's a safe enough spot here to come in and see how the week has gone overall. And it wasn't a particularly pretty week if you happen to be bullish on stocks in general. You know, you can see this nice big break there of the weekly 50 on SPY. You can see over here the break of the daily 200, and the magenta dotted line here is the anchored VWAP to the beginning of the year. So this was a really, really big level there, right around 420. And we're trading a full 10 points below that on the SPY as of now. Not only that, but then we also took out this 50% retracement of the entire high to low drop, which is at 414. So the market here is in a very precarious spot. I think that goes without saying. And in terms of looking for something to change here, the more that it drops, the more that it will be difficult to turn it. And here's why. If you look at the hourly chart, there's a lot of damage there, right? Red and red. You can see your structure, your moving averages are sharply falling, which is not a good structure overall. And if the hourly was the only thing that had a problem, well, you know, a little arrow here, if we ever see another arrow again to the upside here on the hourly chart, would fix most of those problems. However, the problem has now bled over to the daily chart, as you can see here with the high-low pro. And we could say the same thing about the daily chart, right? If you had a happy little arrow down here, that would start to fix the daily. Well, it doesn't stop there, because now the problems have actually gone all the way to the weekly chart. And the weekly chart has been in a precarious situation now for a number of months. You can see the sell signals there that kicked in August, and they've only gotten worse, right? You have 1, 2, 3, 4, 5, 6 sell signals there on the weekly chart. So at this point, you have to actually get a turn signal on the weekly chart to have any type of significant move in terms of turning this structure back to the upside. The problem with that is you can see the green line here is so far away from the floor. And you can also see, very importantly, the squeeze histogram has not yet hooked. What does a hook look like? It kind of looks like this, right? You can see the little hooks there as it starts to consolidate back towards the middle. And over here on the weekly chart, the squeeze histogram is actually expanding away from the middle, which would indicate more bearish pressure. So a little bit of continuation there, from the ideas that we've been sharing from some time. And at this point, you know, I think it's very straightforward that it's a short the rip kind of market. The problem is, of course, that the rip is now so far away from any type of general resistance zone that it does make a little bit of sense to try to wait for a bounce. Of course, this only applies to swing trades. If you're doing day trading, then I think you can continue to pound on every 15-minute squeeze to the downside until the market proves you wrong. But you can see here, normally I would look to sell between the hourly 21 and the hourly 50. So this would be your sell zone all through here. And you can see every time it hits the hourly 21, and most of the time it doesn't even get that high, it has been failing, right? So I wouldn't change a thing here. I think the sell zone happens to be right about here for the market. And if you happen to get a bounce next week, it's going to continue to be a sell the rip type of situation until something meaningful changes. One of the challenges that I put out in the room today was to see if somebody could give me a reason to buy the market. You know, can you give me a single reason to buy the market? And nobody took me up on the challenge. Now, that might be an impossible challenge, but from a technical perspective, there's no reason. From a technical point of view, there's no reason to try to get long a market that has spent this much time under daily 200. Good markets just shouldn't do that, right? So from a technical perspective, there's no reason to buy the market. From a fundamental perspective, there's no particular reason to buy the market. From a global geopolitical perspective, there's no reason to buy the market. So really the only thing that would lead to a little bit of a move higher is going to be some kind of short covering. But then you have to ask yourself, okay, well, if you're short, what's your reason for covering? And at least so far going into the weekend, they don't really have one. So we spent a little bit more time than we normally would on SPY, just because it's kind of the picture that captures the greatest amount of effect. I do want to show you the IWM here because the IWM is truly bad. It is back down to these previous lows right around 162. Um, and of course, some would say that this is a place to buy it because it's the bottom of the range. And of course, you can get a bounce here. So it is something to look out for. But the main takeaway here, you have this level down here. The main takeaway here is that there's really no particular reason to try to get in front of this because while you do have a level, right, in this case, it's actually it should be a relatively strong level, right? You kind of have this trading box here. You can see kind of the ping pong effect there inside the box. So when you're at the bottom of the range, the bottom of the box, normally that is a place to buy it. So we could see a little bit of a bounce there, but my bias is certainly that if we see a bounce, it will eventually go ahead and take that out for all of the reasons that we just discussed on SPY. It's just significantly worse on IWM. So if we then kind of branch out a little bit and say, okay, well, the index looks like shit, IWM looks up worse. What about all of the peripheral parts of the market? What do they look like? The dollar, bonds, things like that. And the dollar here, this pattern is one that is very conducive to breaking out, right? This is a little bit of a continuation pattern on the dollar because you're going to have a little bit of a bull flag there. And unlike the rest of the market, the dollar actually is on the other end of the spectrum in terms of being on the right side of the arrows. So the dollar here doesn't help matters, right? One thing that you would want to see is if you're bullish at all, you want to see a sell signal in the dollar. That'll help things out in the broader markets, but you're just not seeing that here quite just yet. We then take the story over here to the ZB. This is going to be the interest rate. And we have to ask ourselves, okay, well, what do we see here? Do we see anything that's meaningful? You ideally want to see interest rates come in a little bit just to relieve pressure on the market to some degree. So the ideal situation would be something like dollar down, interest rates down, and then indexes at support. And then that would start to create a little bit of an upward bias. For now, on the ZB, I just don't have enough here quite just yet. We've discussed some positive divergences in the room. I don't think they're that relevant as of yet. We might have to discuss them in more detail in this video next week, but at least for now, as long as the ZB continues to trade under the 21, I would treat it like the downtrend that it is, right? So I can't say that the ZB here is really helping matters either in terms of the dollar. And then lastly, if we look at VIX, you're going to have the VIX here at 21, and the magic level for the VIX here is 23. So above 23, I think you're going to get kind of a capitulation event. The reason I'm using 23 is because it's the weekly 200 and also this previous swing high, right? So I think if you start to get above there and you have a squeeze and you can see your labels here, green, 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 double green, green, and double green, very dangerous alignment here, right? So then ask yourself, okay, well, all the folks that were selling VIX down here during the good old days, where do they start to get in trouble? And it's very, very likely that it's above 23, right? That weekly 200. So in the event that next week we start to see a VIX above 23, then there's only one way to play the market, right? It would be straight up to the downside. And in probably a very strong way. But a VIX above 23 combined with all the signals that we've just looked at could certainly lead to a capitulation event, something like a 3-4% down day in the index. And I don't think that's too much of an exaggeration based on the totality of what we're seeing, where you have the index below the daily 200 for multiple days, below every key fib. You have the dollar with a bull flag that could break out and cause problems. You have interest rates in a pretty severe downtrend with a lot of volatility, which could cause a lot of problems. And then, of course, you have the VIX here with a clean breakout level and a clean daily squeeze at 23. So going into next week, it continues to be a very dangerous time, right? Not only geopolitically, of course, that's kind of the new kid on the block is the geopolitical risk, but then the existing risks haven't gone away, right? The existing risk being interest rates and the dollar. And then, of course, you now have the new geopolitical risk on top of that stuff. So one thing that I've been kind of sharing in the room is that earnings doesn't really matter, right? It'll matter for that company specifically. Like if you owned Amazon into earnings, you're feeling pretty good. but it's not going to be sufficient enough to change the big picture, right? In order for the big picture to change here, something needs to change with one of these three things that we've just talked about. The dollar needs to drop, interest rates need to go lower, and or the geopolitical stuff needs to chill out, right? And then at that point, that'll at least create the initial initiative to cover your shorts. And then at that point, that could actually maybe create at least a week, 2 week long kind of short covering rally. That would be a little bit of a change of pace there, and allow better entries at resistance levels on the index. So one thing that I do want to point out to you guys, and I'll kind of leave this as maybe a little bit of homework for you. These are my weekly notes that I did to start the week. I want you to take note of all of these things here that have weekly squeezes, or monthly squeezes. XLB, the materials, energy, banks, consumer staples, utilities, healthcare, consumer discretionary, transports, the SPY, IWM, DIA, the equal weight S&P, which is RSP, and then junk bonds. And what happens if this monthly squeeze fires short is my question to you, right? So a little bit of homework for you. Check out these symbols on your own this weekend. Look at them on a monthly chart and see if you can make sense of it. See if it makes sense that the monthly squeezes might actually become a problem here. So you got to kind of square that circle a little bit going into next week as well. So I'll go ahead and wrap it up there, guys. It's really just more of the same. So again, as long as these three things continue to press on markets, there's no particularly good reason to buy, right? There's just no compelling reason to buy. There's no compelling reason to cover your shorts. The market can't even get above an hourly 21. And then you have the pressure from the dollar, bonds, and geopolitical risk just continuing to hold things down. So you got to see one of these three things change. Ideally, if you're bullish, you want to see a little bit of improvement on all three fronts. And then at that point, that'll create an initial short covering rally, which could then develop into something bigger, as the shorts are going to be usually the first ones to cover. All right, guys. Well, that is my time. Hope this was helpful. We'll come back next week and maybe do a little bit of a deeper dive together, either in the premium video or in the free video regarding the monthly squeezes, just so you can see the potential there that could develop, because it is something that we've been warning you about. It's taken its sweet time, but once it gets going, it is something that goes very quickly, right? So it is something that's imperative to be very aware of, and in next week's video, we will cover that. All right, guys, have a great weekend. Hey, traders. This is Sam with Simpler Trading. I want to thank you for watching today's video. Hopefully you found the information in it helpful. If you did, leave us a like, leave us a comment. It really does help us out with the algorithm. And if you want to see us trade live with our own real money and be part of the community, come and check us out at simplertrading.com.